Good morning, everyone. Thank you for joining me today. I think we have a really great training presentation webinar scheduled for you. And as you saw, it's about doubling your income by asking a simple question. So as some of you may experience, GoToWebinar does take sometimes a minute or two, especially if you haven't logged on in a while. So I am going to give just about 1 minute before we start going. So if you need to grab that last minute cup of coffee or tea, go ahead and grab that. My name is Jim Codney. I'm our National Sales Director here at Western Marketing. So just give us less than 1 minute and we'll get going for you. Thank you. All right, everybody. Thank you very much for joining us today. My name is Jim Codney, National Sales Director here at Western Marketing. Thank you so much for joining us today, giving us a little of your valuable time. Hopefully, you'll get some really good pearls of wisdom. I'm confident you will. I'm pleased to have a partner of ours that works with SILAC to actually hop on and really talk to you about what a lot of us are missing in our business. And he's going to simplify it to basically how you can double your income by asking one simple question. So with that, I'd like to go ahead and introduce Todd Weiss. And again, he's our partner with SILAC. And Todd, good morning.
Awesome. Well, Jim, thanks for having me on here. And I love working with you guys. I want to tell my story and then teach you how easy it is to double your income with your existing clients. So with that, I put this little PowerPoint together. You know, if you want a copy of it, I can get it. I know this is recorded, but I can send this to you if you'd like. But what did I miss? You know, let's tell a little story about me in the field here. Let me get this thing going here. You know, I started out as a LOA or a career captive agent, you know, so the company got all the commission, they paid me what they wanted to, but I was working a lot. I was in the home 4 days a week, or 4 homes a day, probably 5 days a week. And I'm just going to spoil this for everybody in this call right now. I never asked anybody about retirement, never once. I was focused on selling my Medicare supplement, my Medicare Advantage, my hospital indemnity plans, my cancer plans, life insurance. I never asked one person about retirement. And I'm going to teach you ways to ask about retirement here in a bit, but you just got to ask them, do you have an old 401k? Do you have an old retirement account? That will put an extra 50,000 bucks in your pocket this year if you just go, do you have an old retirement account? So let's do some math here real quick. I was in 4 homes a day, 5 days a week. That's 20 homes. Now, I wasn't making a sale on all 20 homes, but I'm in there talking to people. You know, sometimes they don't qualify for any health insurance, so you can't sell them anything. Doesn't mean they don't have a retirement account. So I was in 20 homes a week. Let's say 50 weeks a year, take a couple weeks off for vacation. That's 1,000 homes a year. I did this for about 8 years. So that's probably in 8,000 homes before I ever asked anybody about retirement. So let's break that down a little bit more. Let's just say 25% maybe of those homes had a retirement account, okay? That'd be 2,000 households. That's household, husband or wife, but let's consider it just, you know, maybe one account for the easy math sake. That's 2,000 potential clients. Now, if I could just close 15% of that, 15%, that'd be about 300 sales. Well, our average sale right now is about $100,000. So I did not write $30 million in annuities, which I should have. $30 million. Let's say you made 5% of that $30 million. I would have made $1.5 million in commission over those 8 years that I didn't make. That's 187,000 bucks a year extra. Would anybody on this call want to make an extra $187,000 a year? Well, what if you just did a fourth of that and you made $47,000 a year? Would you take an extra $47,000 a year by asking your client, hey, do you guys have a retirement account? It really is that simple. True story, this just happened, okay? I was at a kid's birthday party. One of my wife's college friends, she her kid turned like 1 or 2. I don't even know how old the kid was. So I go there, and I'm a salesperson. You know, I did a lot of Medicare in my day. So I start talking to the grandma. Okay. Hopefully everybody on this call is doing the same type of thing. Hey, potential client, let's go talk to them. Start talking to the grandma. Hey, you know, I know your granddaughter and your granddaughter and my wife went to college together, blah, 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 blah. Start talking about Medicare. Oh, I already got my Medicare covered. I got the high deductible G, and I looked up the price. It was about 40 bucks a month. Okay. So agent made $100, maybe even less. That's $100 if he got, you know, lump sum or upfront or whatever you call it nowadays. He made $100. Okay. He didn't ask about retirement. So what I do, okay, well, you got your Medicare covered. Here's some things you can tell people. Oh, well, another thing I do is I help turn that company-controlled 401k or 403b into an IRA. She was actually a teacher. She had a 403b. Oh, well, I can help turn that old 403b into an IRA. Oh, you can? Yeah, I haven't done anything with that yet. Perfect. 401k, guys, just to make it simple, 401k is for profit. 403b, nonprofit. Those are the two biggest ones. So when someone says, hey, they work at a school or a hospital, it's probably a 403b. They work at Ford building cars, it's a for-profit company, they make a 401k. Other statements you could use. Hey, another thing I do is I turn that 401k, 403b, whatever it is, into a guaranteed check like Social Security. Would a guaranteed check every month help you out? Well, yeah. Okay, well, how much is in the account? When do you guys want his income? Let me talk to my team, Jim and me and everybody else. Hey, let me talk to my team and I'll get back to you and I'll show you how big of a check I can get you. Another thing I do, I help people avoid that 25% penalty if that retirement account's not set up correctly. Has anyone gone over that 25% penalty with you? And if people on this call don't know, retirement accounts, if it's a traditional account, we're not talking Roth here, we're talking traditional. If it's a traditional retirement account, it's never been taxed. At age 73, the government says you have to take out required minimum distributions, or RMD. It's required because you have to do it, minimum because you can take more, distribution or income, take out a little bit and pay taxes on it. You've never paid taxes on this money, so the government says, hey, at 73, take out a tiny bit and pay taxes on it. If you don't take out that tiny bit, it's 25% penalty goes to the government. So we don't want anyone to get that penalty. So when I'm in the home or talking to someone new, I'm like, hey, another thing I do is I help people avoid that 25% penalty on your retirement account. Has anyone ever gone over that with you? Now, these are things I can say to people when I meet them in public, but mainly when I'm in the home. So you go to the home, you warm up. You don't jump right into your Medicare. You don't jump right into your final expense. You don't jump right into whatever else you're trying to sell them. You'll warm up. I'm sitting there at the kitchen table. Hey, what'd you do for a living? Oh, you were a teacher? Great. Check. Oh, what'd the husband do? You worked at Ford? Great. Check. Make your sale. At the end of that sale, say one of these things. Oh, another thing I do is I help protect and preserve that retirement account you told me about, and I can guarantee it no losses. Did you lose money in that account in 2022 like everyone else did? Oh, you did? Well, I can guarantee that account never goes backwards. Does anyone talk to you about that? No? Great. How much is in there? Let me talk to my team. Let me build a plan for you. You can say these things anytime you meet somebody. And I said that first one to the grandma at the party. Another thing I do is I turn that company-controlled 401k into an IRA. And you know what happened? I protected a lot of her money. If you see here, this is my bank statement. This is not the company's. This is nobody else. I made $44,890.62 at a kid's birthday party. Now, would you rather be the Medicare agent that made $100 or the annuity agent that made $45,000? I'll take option 2, Bob. So that's what we do. So I love indexed annuities, guys. That's what we're talking about here. What do indexed annuities do? They give you principal protection and accumulation or growth. They protect your money and they grow your money. It's really that simple. Think of it like this. This might not be your favorite quarterback, but it is the best quarterback on the best team in football right now. I live in Kansas City. I'm very thankful that this guy's our quarterback. But let's just pretend your favorite team. Your favorite team has the football in the fourth quarter of the football game. You are winning by 2 touchdowns and there's 5 minutes left to go on the clock. You're up by 14 points, 5 minutes to go. You have the football. Are you going to tell Patrick Mahomes to throw a Hail Mary right now? You're probably shaking your head going, that's silly. How about are you gonna do like a crazy play and have Patrick Mahomes go out as a wide receiver and try to catch the pass? No, you're not gonna do that either. Why are you not gonna do that? Because those are risky plays. You're already winning the game. There's no reason to be risky. And that's what seniors are doing. Seniors are winning the game because they have a pile of cash. That pile of cash could be $10,000. That pile of cash could be $1 million. That pile of cash could be $57,000. They're winning the game because they got a pile of cash. I tell them, hey, let's protect your lead and help you enjoy your victory. Now, guys, I sell myself, and one time I'm like, I want to help you protect your lead, and I said something like the game's over or something like that. Seniors don't like hearing that the game's over, they're going to die. So I changed that. So I'm going to help you protect your lead and enjoy your victory. They have a pile of cash. Not everybody has a pile of cash. We're going to protect that pile of cash, and we're going to grow that pile of cash. It's literally that easy. So basics for an annuity. You could really put this on little kids, and SILAC has some great programs. If you don't know about Vega, we'll do another one on that for little kids. But 0 to age 90, minimum premiums $10,000. We're not trying to find people that don't have any money. We're finding retirement accounts. We're finding lump sums. And with this one, you can roll over funds for 12 months, but that's it. Maximum is $1 million. I put a request in the other day, and SILAC approved a guy up to $5 million. I've not written the app yet, but it's they'll take it. They'll take things over $1 million if they have enough cash. So I tell everybody you can retire in style. This is my sales pitch. This is how I sell $1 million a year, and my full job is training people like yourself. I'm not even in the sales field, but I still sell $1 million a year because I talk to people at birthday parties, at barbecues. I had a guy coming to clean my couches because my kids spilled like grape juice on them. Started talking to the guy. He was going through a divorce. I ended up protecting $187,000 of my couch cleaning guy. Money is everywhere if you talk to people and you let them know that you can help them retire in style. Well, what is that? Safety. This is the biggest bullet point. Do you have to use every bullet point every time you talk to somebody? No, but you always want to hit on safety. I can guarantee no market losses. This is a great chart. It's not from SILAC, they're another company, but it's a great chart to have. It shows you if the market's down 20%, you got to make 25 to break even. Market's down 50%, you got to make 100% to break even. So just because the market's down 20 and up 20, you're not even. You're still down because you only gained 20% of the lower figure. So you got to always gain more than you lost to break even. That's why seniors love this. Down year, they get a 0. They didn't lose a penny that year. The next year when the market goes up, hey, they get some of it. So they're ahead. So let's look at last year for an example. And if people are selling these things, you should definitely Google 2022 and maybe even longer history to know what happened. Last year, the market was down 19.4%. I probably should have asked everybody, what did the market do last year first? A lot of people probably think it was up, or, oh, it was down maybe a little bit. No, it was down 19.4%. So if you had $1 million last year, you lost 19.4% of it. Now you get 806,000. What would you do if you lost 20% or 200,000 bucks? I like to put my clients' real numbers in this scenario and show them. But let's say this was the real number here. Hey, you got $1 million, now you got 806,000. So client, you lost 20%. Now what are you going to do? Are you going to go to Walmart now and be a greeter? Oh, you don't want to go back to work? Okay, then are you going to spend less money in retirement? Like, are you not going to buy your grandkids Christmas presents now? Are you not going to go out to coffee with your friends from church because you want to save some money? If you lost 20%, you probably got to cut out 20%. What are you going to cut out? And I like using real world experiences like that. Are you not going to buy your kids Christmas presents? Do you want to go be a greeter at Walmart? They don't like hearing these things. It makes it kind of awkward, but it makes them think, wow, what if I did lose 20, 30% of my portfolio? What would I do? Hey, I'm glad we're talking because I guarantee no market losses. So any money in this program will be guaranteed not to lose a penny. In addition, tax deferral, there's no money till you take the money out. A lot of agents and a lot of clients are worried, hey, well, I got $500,000 in my work account. If I roll it over to this program, I don't want to pay taxes on the $500,000. Nope. We take it from a 401k to an IRA. We take it from a 403b to an IRA. All we're doing is changing it from a company controlled account to an individual retirement arrangement. IRA, individual retirement, individual retirement. It's still retirement. We're just taking it from company control to individual control. So no money till you take it out. Yield. This is another great one. I say 4 to 7%. You know, bank CDs are on the lower side. The stock market's 8, but the stock market's 100% at risk. So you don't get the full market gains because we give you that safety. We give you the no market losses. So here's your scenario. Right now you got $1 million and you're hoping to get a 10% gain. You're hoping that goes up to 1.1 million, but it could just as easily go down to $800,000. Or situation, the second one here, you have $1 million. Maybe when the market goes up, you get $1,070,000. You made 7% versus 10. But if the market goes down, you still have your $1 million. Which scenario would you rather have, client? They're going to go on. I want option 2. Yeah. Option 2 is me. Option 1 is with the broker, or option 1 is the money in your 401k right now. You could literally lose 20% tomorrow for all I know. With anything in my program, and I say programs, I'm not saying annuities because sometimes annuities have the bad rep about them. If you have the second one, that's my program. I guarantee you no losses, but when it goes up, you just don't get all the gains, you get part of the gains. In addition, we can turn this into guaranteed lifetime income, or you can just have liquidity and you can just pull money from it, in the future. Don't always go to the 5 or the 10% right now, but I just go over this. I like going over the guaranteed lifetime income. Most people like that. Once again, one of my transitions, when I am selling some Medicare, I still sell 15 policies a year, but those mainly referrals. But when I'm in a home, I go, oh, by the way, another thing I do is I take that 401k you told me about and I turn it into a guaranteed check to Social Security. And then any money left over goes to your spouse or your kids or your church. Would a guaranteed check help you out? Yeah, okay, well, how much is in your account? When do you want that guaranteed check to start? Let me see how the check I can get you. I'll come back on Tuesday. It literally is that easy. Now, E, estate advantages. Any money in this program avoids probate court and goes directly to your beneficiary. Now, you might be asking, well, why is this important? Well, life insurance does the same thing. Annuities are part of life insurance. However, though, if the money's still in the 401k, well, I got a will. A will is a letter to a judge telling them where you want your money to go, but they don't have to do that. If someone goes, hey, well, I redid their driveway and poured a new sidewalk for them and they never paid me, the judge can go, okay, well, here's 15 grand out of the account to pay this person off. Someone else can make a claim against your estate and the judge can just pay them. Oh, the whole time while you're in probate court, they take money out to pay for the probate court. So any money in this program avoids probate court and goes directly to your beneficiary. People buy trust to do the same thing. You don't need a trust because it's got one of the same benefits. Lastly, I like to say style with an A, annual reset. Any gains are locked in. So you went from $1 million to $1,070,000. Hey, that 70 grand's locked in. You can never lose that 70,000 bucks. Now, here's how it works for you guys. I will show this slide to clients sometimes too. Here's what happens when you buy a fixed index annuity. You've got a pile of cash. We're going to give it to the insurance carrier. Now, the insurance carrier doesn't go to Vegas and put it all on black hoping to win. No, the insurance company invests that into bonds, safe bonds. And what do those bonds do? Those bonds return a fixed rate. Okay? That fixed rate goes right into your contract. Let's take a look at our sheet here. I don't think I can draw on this anymore. Nope, I can't do this. But if you look in the upper right-hand corner under Denali 14, 5.75. That is the fixed rate right now. They could put the money in there and get a guaranteed 5.75. Now, I'm gonna do this as an example for you guys. Let's say they had $100,000 in the account. I can do easy math on $100,000. That'd be $5,750 guaranteed. Okay? But if you look at the name, it's called a fixed indexed annuity. Well, fixed is the first thing that came first. The fixed rate is the 5.75. That's the fixed rate. Or we could index it. It's kind of like you're playing a game of let's make a deal. I have $100,000. Do I want $5,750 guaranteed, or do I want to trade that to what's behind door number 1, what's behind door number 2, what's behind door number 3? I don't know. Let's see what would happen if you did index it. Just look at the next line down. S&P 500 annual P2P stands for point-to-point cap. So it's an annual point-to-point. So today is August 22nd. If they bought the policy today, their year would be August 22nd to August 21st of next year. So it's 365 days. Their year is not January 1st to December 31st. Their year is when they buy the policy, 365 days from the point to point, this point now to this point later. They have a cap of 14.5. So let's just dive into that. Well, this is showing a cap of 5%, okay? But right now they got 14.5. Here's how a cap works. A cap's just a lid. The market's up 20. Well, they had a cap of 5 in this example, so they got everything up to 5. Our current rates are 14.5, so they'd get everything up to 14.5. Well, let's say the market's only up 3. Well, then they get everything up to 3. There's no fee or anything else with it. They get everything up into the cap, so they'd get 3 in that scenario. The market's down 5. Well, they just got a 0 that year. They didn't lose anything. I like running illustrations on a cap. People understand what a